Ladies and gentlemen, good day and welcome to the Indian Railway Finance Corporation earnings conference call, hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kunal Shah from ICICI Securities. Thank you, and over to you, sir.
Thank you, Katie, and good evening, everyone present on the call. This is Kunal Shah from ICICI Securities. Today we have with us Mr. Amitabh Banerjee, Chairman and Managing Director, and Mr. Shaili Verma, Director of Finance from Indian Railway Finance Corporation to discuss their Q1 FY22 earnings. Over to you, sir.
Okay, thank you very much, and good afternoon, ladies and gentlemen. Am I required to go through the slide presentation, or we can just go through the financials right away? What do you want me to do? Do you want me to go through the slide presentation?
Yeah, so maybe key industry metrics and financial.
Fair enough.
Okay, thank you.
Okay, so starting with the company overview, you must have got the presentation. I'll just dwell on the important points and the incremental ones because we have already gone through these slides earlier also. So slide number 1, if you see, the AUM has been logged at 3,66,155 crore to end of June 2021, which has grown at a CAGR of 32.9% over the last 3 years, right from FY19 to the end of Q1 22. The net worth has grown to 37,416.5 crore. Return on equity and return on assets are 15.78% and 1.57% respectively. There is no NPA in our books, as always, and the tax liability as of now is nil. The total debt stands at 3,28,347 crore. NIM has grown to 1.66% on an annualized basis. And ratings, of course, from all the domestic rated agencies are at AAA and A1 plus for the short-term loans. And net gearing ratio, the capital gearing ratio is at 8.78x. 8.78 times the net worth, and the capital adequacy ratio has grown to 468%. Now, coming to the main ratios, if you see, the total income has grown from 3,669 crores in June 2020 to 4,581 crores, growing at 24.87%. And the PBT has grown from 891.81 crore in June 2020 to 1,501.95 crore, logging an increase of 68.42% as compared to the corresponding quarter of the previous year. The net worth has grown from 31,192 crores last quarter to 37,416 crores. Registering an increase of 20% approximately, and AUM has grown from 2,73,000 crores last quarter of the last year, Q1 of the last year, to 3,66,155 crores, registering an increase of 34% approximately. Total borrowings have increased from 2,34,000 crores in Q1 FY20 to 3,28,347 crores. Q1 FY22, logging an increase of 40.22%. The NIM, as I said earlier, is at 1.66%, which has grown from 1.43%, that is Q1 of FY20. The return on net worth has grown from 13.34% in Q1 FY20 to 15.78% to end of Q1 FY21. And the return on capital employed has grown from 4.45% to 5.62%. Return on total assets has grown from 1.35% to 1.57%. Earning per share has grown from 3.38 to 3.66. and book value per share has gone from 7.48 to 28.63. The PBT turnover ratio is at 32.78%, which has grown from 28% last year. The debt equity ratio, as I said, was 8.78. It was 9 to end of March 2021. So these are the major financial parameters. And coming to some of the slides, I'll like to dwell on. Key strengths, as you know, we play a strategic role in the growth of Indian Railways, and that still remains the case. We are a firm characterized by very competitive cost of borrowing. The cost of borrowing, as I said last time, has gone down by almost 86 bps as compared to last year. Low risk cost-plus business model. We have been treading out a consistent financial performance, experienced senior management team. We are a systemically important non-deposit taking infrastructure finance company in BFC. And as far as the regulatory exemptions are concerned, we are having dispensation from the asset classification norms, provisioning and LCR norms, exposure norms, and trade concentration norms. And we are also exempt from the GST on the lease rentals on the rolling stock assets. And the snapshots of key financials I have already told you. And key ratios also we have said. Asset under management, you can see on slide number 9, that has grown from 1,54,000 in 2017-18 to 3,66,000 in Q1 to 21-22. The net gearing ratio is hovering around 9 or thereabouts. It has gone down in Q1 21-22, so we have still some room left for further borrowings, assuming a 10:1 capital gearing ratio. And as far as the rolling stock is concerned, we have 87% of the total passenger coaches in our books. We are owning 87% of the total coaches of Indian Railways, and 89% of the total locomotive population of Indian Railways is owned by IRFC. And as far as the freight wagons are concerned, it constitutes about 82% of the total population of the freight wagons. It's a low-risk cost-plus business model that you already all know. And in FY21, our weighted average cost of incremental borrowing was 6.71% for rolling stock, and it was 6.51% for the project assets. And from RVNL, we are charging at 8.77% fixed, and in case of IRCON, it is 8.77% fixed charge over the cost and over the disbursements. And RVNL, we are charging 88 bps over the weighted average cost of capital. And the balance sheet, of course, I've told you earlier, it has grown from 3,78,000 to end of March 2021 to 3,86,000 to end of June 2021. At the end of 30th June 2020, the balance sheet size was 2,83,000, so it has grown by more than 1 lakh crore over a period of 1 year. I think that would be the end of the presentation. Now I'm open to questions.
Thank you very much, sir.
Yeah,
Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Kunal Sharma from SMC Private Wealth Limited. Please go ahead.
Good evening, sir. Thank you for the opportunity. Couple of questions I have. The first, sir, how can we improve the net interest margin from the current level? And how much are we expecting the same going forward? Is the first question.
Okay. You see, as far as the net interest margin is concerned, it has grown a bit in this quarter. That's primarily because of the fact that the asset under management during this particular quarter was not that substantial, and we have got the benefit of the interest for the entire year that we had on the disbursements that we had made last year. So that has actually contributed to the increase in NIM at 1.66%. But going forward, how to increase the NIM would be by way of once we diversify our loan portfolio to beyond sovereign. Number one, that is one way in which we can do. And also we are in talks with the Minister of Railways for increasing the margin also. But you will appreciate that since it's a since it's a loan to the sovereign and the entire receivables are all secured, therefore there's not much of a scope for a substantial increase, but an increase can be expected in times to come. So that's how we can improve the NIM going forward. And the second question?
And the second, sir, are we planning to increase the dividend payout policy going forward? Please please throw some light on the dividend payout policy for FY22 as well.
You see, we are going by the dividend payout policy as per the guidelines of DIPAM. So we have already paid more than 31% of our PAT, of our profits as interim dividend earlier, about 1372 crores, which came to about 1.05 per share. So 10.5% dividend payout we have already given. So that would remain, and this would remain so in days to come. We are not going to seek an exemption as far as payment of 30% of profit is concerned. That will continue in future years also.
Oh, okay. Fair enough. Thanks a lot.
Yes.
Thank you. The next question is from the line of Nidesh Jain from Investec. Please go ahead.
Thanks for the opportunity, sir. So firstly, on the equity capital requirement, since we are growing at a pretty fast pace, and our ROEs are a bit lower than the growth that we are expecting. So when do you expect to come back to the market in terms of equity capital raise? And is there a way to postpone that, given the valuation at which the stock is trading at currently?
Yes, that's a pertinent question. You see, as far as fresh equity infusion is concerned, that is ruled out as financial year. We don't foresee any fresh infusion of capital this year. And going forward, we will see that how it pans out as far as the mandate is concerned. We are presently at a mandate of 65,258 crore from Indian Railways for this financial year. Now, but still we are at 8.78x. So going by the 10x also, we are quite comfortable in a comfortable position without the occasion to go in for fresh equity infusion. And we also look at the opportunity of increasing our capital gearing ratio to beyond 10 going forward. So that would obviate the immediate need for any capital infusion. For fresh equity infusion, or in the near future.
Is it driven by regulation, or it is driven by credit rating agencies?
There is no regulation on the capital gearing ratio. It is an internal policy matter of the company, and we can go beyond 10. There is no issue, especially when the capital adequacy ratio is for 58%. We feel that there is a scope for increasing our gearing ratio.
So hypothetically, if we reach, let's say, 12 times gearing ratio, even then we don't foresee any issue in terms of our credit rating or credit rating?
No. There is no issue on that side. The credit rating would not be hampered in any way, and there wouldn't be any kind of an adverse impact, especially because they've got a good buffer of capital adequacy at 458%. So I don't foresee any kind of a credit downgrade or anything of the sort, even if we go beyond 10 as far as the gearing ratio is concerned.
Understood, sir. Understood. And sir, secondly, on the spread that is decided between us and the Ministry of Railways. So for financial year FY22, is it already decided or it will be decided at the end of the year? But
at the end of the year. At the end of the year. The margin is decided at the end of the year. The margin that we decided for FY21, that was decided after March of 2021. So only after the completion of the financial year, the rates are decided.
Okay, and that was 40 basis point on our rolling stock and same margin that we were having in the past.
Same margin. 40 on rolling stock and 35 on project assets.
So do you expect some improvement in this over next year?
We have talked to them. I mean, these are, you see, we have, the country is going through trying times, especially in view of the pandemic. So there are budgetary constraints. So in this scenario, it's not expected that government will take a very, immediate call on this, on increasing the margin as of now. But we are already in talks with Minister of Railways on that front too.
Understood. Sure. That's it from my side, sir.
Thank you.
Thank you. The next question is from the line of Naman Kumar, an individual investor. Please go ahead.
Hello, sir. Thank you for providing me the opportunity. So my question is with respect to the return on equity. So for this quarter on an annualized basis, if you see the return on equity is 15.78%, right? But if you see the business model of IRFC, right now it's leveraged at 8.78, so 40 basis points margin will, suppose say it's 9, so 3.6% plus whatever is the weighted average cost of borrowing, say 8%. So I think return on equity for this business model cannot exceed 12 or 13% at max. So how do we reconcile the return on equity of 15.7%?
Yeah, that's a matter of calculation. But what you're missing the point is that we are also leveraging the fresh equity infused we have, as well as the retained profits, which do not bear any cost. So that accounts for the delta portion that you have between 8 and.
Even after accounting for that, so say weighted average cost of say is 8%.
That would be a matter of calculation. I mean, I'm glad that you have factored in those that point also, but that would be a matter of calculation. This has been checked and cross-checked by the auditors, and accordingly we have. Although the accounts are unaudited, but they have all gone through. So these figures are absolutely well examined. So we need to reconcile. So the reconciliation needs to be done between you and our people as far as the figures are concerned.
Okay, yeah, because maybe I'm not sure. You guys, like your team is more close to the numbers, but somehow as per business model, it seems like the return on equity for the company cannot exceed 12 or 13%, unless there is something.
That you need to get in touch with our people. We will be too glad to share the information with you.
Sure. I'll reach out to whom should I reach out to for that?
Mr. Ojha, who is on the line, you can always reach out to him. He is the general manager who is looking into these accounting matters.
Okay, perfect. I'll reach out to him. Thank you.
Thank you.
Thank you. The next question is from the line of Nitin Dharmawat from RM Capital. Please go ahead.
Yeah, thank you for the opportunity. I just have one question. I just want to understand what is the dividend distribution policy, if you can explain that.
The dividend distribution policy is as per the policy which has been enunciated by DIPAM. And accordingly, they have issued guidelines, and we are going as per those guidelines, and we are distributing 30% of profit after tax. We have already distributed the dividend for the last year by way of an interim dividend amounting to 1,371 crores, which was about 31% of total of PAT. And going forward, we will continue distributing the dividend at 30% of PAT.
Got it. And this year, when are we expecting the dividend to come? Just some ideas.
Yeah, that will be towards the latter part of the year, of the financial year.
Got it. Thank you.
Thank you. The next question is from the line of Ralston, self-employed. Please go ahead.
Yeah, hello. Good afternoon, sir. My question was related to the recent announcement from the Prime Minister Modi on the Independence Day about the Gati Yojana, where there's an expenditure planned of around 100 lakh crores. What is the kind of benefits that we are looking towards coming our way for this particular opportunity?
You see, there's a national rail plan in place, National Rail Plan of 2030, which is about 11 trillion rupees, that is 11 lakh crore out of this 100 lakh crore. And that will make the Indian Railways ready for 2050. I mean, infrastructure ready to cater to a period up to 2050. And Railway Finance Corporation will be playing a major part in this capacity expansion program of Indian Railways. And as you must have seen over the years, our proportion of funding the capex requirements of Indian Railways has been on the rise, and that would really contribute to the robust growth of both top line and bottom line of IRFC going forward in view of this NRP, which is a subset of this of the plan that our Honorable Prime Minister announced on the 15th of August.
Sir, my second question was with regards to the momentum of the Railway Ministry going for the increase in the investments as far as railway infrastructure is concerned, and we have been one of the direct beneficiaries with the 1 lakh crores being increased in the last 1 year. Do you see that the momentum will continue to increase over the coming future, the foreseeable future?
Yes, we do foresee that, and that's primarily because of the fact that it all depends on the gross budgetary support that Government of India is able to provide to Minister of Railways for financing its capex needs. Now, going forward, there is a limit on the GBS portion, and especially in a scenario of in a pandemic environment. When the revenues are hard to come by, it's a bit of a there is a constraint on the GBS portion, and therefore the railway is taking recourse to the extra budgetary resources requirement. That is what we call as the EBR requirement, is that much heightened, and therefore there the role of IRFC actually comes in. So therefore, it will be, as you saw last time, out of 1,51,000 crore of total capex requirements of Indian Railways in FY21, we contributed about 1,04,316 crore. So it is almost 68%. So so going forward, we feel that if not 68%, but at least it will be more than 40% or so going forward. And because last time it was 60%, primarily because of the fact that the requirement was much more than the GBS could support. So, and the GBS for FY21 was also limited because of the the initial pandemic year when the government revenues were pretty muted. So therefore, going forward, in this financial year, the GBS has been increased. But despite that, we have been given an initial target of 65,258 crores as against 58,000 crore that was given last year. So the initial mandate has been increased, and going forward, this mandate may be revised upward. So, but in the years to come, of course, we will contribute a major proportion of the capex requirement of Indian Railways.
Thanks a lot, sir. Congratulations for the fantastic results. Thank you.
Thank you so much. Thank you.
Thank you. The next question is from the line of Santosh Keshri from Keshri and Company. Please go ahead.
Thank you for giving me an opportunity. I had a couple of questions. One is about the incremental borrowing cost that IRFC had is 6.71% in calendar year 2021. So my question is that isn't it too high? Like an individual borrower borrowing in India at this point of time can easily borrow at something like 6.5%, 6.25%. One is a top class borrower. A sovereign borrowing at 6.71% seems to be pretty high. So why that is a concern is that if you are borrowing at a lower cost, then maybe you can negotiate well with Indian Railways for better margins, because sovereign paying at 7.1% may not be liking it. And if you compare that with somebody like HDFC borrowing from international market, they would be borrowing at a much lesser rate, maybe 5%. So how is it that we are borrowing at such a high rate?
Well, I mean, your question is based on lots of hypotheses that you have in your mind. The actual situation is far from what you have just now described. You see, the point is that yes, it is 6.71 only for the rolling stock portion that we have. The weighted average cost of total borrowing is around 6.51%. You still feel that 6.51% is pretty high. Now, you have not probably factored in the tenor for which we take these loans from the market, number one, and the kind of the tenor that we are lending to Indian Railways. You know, to Indian Railways for the rolling stock, we are lending for 15 years. It's basically for 30 years period, but the lease period is only for 15 years. We get the entire lease into initial 15 years. And we are borrowing for 20 years. We are getting you'll be surprised to know, we issued 20-year bonds last year. The last tranche I still remember was about 6.8%. Which particular firm, you're talking about HDFC, which particular company in India, you name any company in India which has been able to raise, or any entity, any state government entity, you look at the loans that the bonds that the sovereign bonds, you compare our bond rate with the sovereign bonds. 6.8% 20-year bond. Where do you get this? I mean, you need to look at the statistics. You need to look at the figures. As a matter of fact, now you're talking about the kind of benefit that we are passing on to Indian Railways. You'll be glad to know that we in 2021 we reduced the weighted average cost of borrowing by 86 basis points. It was 7.37 earlier. It is now 6.51%. 6.51% for long-term loan. I don't think that's on a higher side, and that's, in fact, even Minister of Railways is pretty happy with this, and even the bankers. We are getting long-term loans. We have got long-term loans for 15 years with a moratorium of 5 years, even at 5.9%, 5.95% last year. This is the weighted average cost. 6.51% is the weighted average cost of all the borrowings put together, from either through ECB or through the rupee term loans that we get from the domestic market, or bonds. ECB is the 144A bonds or the Regas bonds. You see, last year, not last year, this calendar year, in January 2021, we raised $750 million at 2.75%. This is the lowest, and that was about 10. I think 15 basis points lower than our secondary yield in the market. Our own IRFC papers were trading at a higher price than that. So we mobilize the funds from all over the world at the lowest cost possible. No other NBFC. You just tell me any NBFC which is able to raise money at this cost, except that, of course, is not an NBFC, but except Exim Bank. Only Exim Bank is a policy banker of Government of India. They are in our league. No other NBFC, be it the private sector, be it the public sector, can match our rates in the market, because we are almost quasi-sovereign. So we get the best deals in the market, and we pass on the entire benefit to Minister of Railways. We just take the margin over that, and that is all. And we pass on the entire benefit to Ministry of Railways. And Ministry of Railways have been benefited by the kind of loans that we are able to, by the kind of money that we are able to mobilize. They have been benefited, and they have recorded their appreciation also.
Okay, that's really very good that you are doing that. In fact, I was coming from the media reports wherein it said that IRFC was able to place bonds at something like 2.51%, as you said. And here we are seeing the cost of 6.71%. So my question related with this is that does this cost include the cost of swap also for foreign borrowings, or it is only the basic?
Yes. We do load the hedging cost over it, and what happens is, while calculating this cost, we do load it, but at the end of the year, we don't go for the full hedging of the entire ECB portfolio. So whatever partial hedging we do, depending on the circumstances prevailing at that point of time, we pass on the remaining cost, what you had loaded, back to Minister of Railways. We don't keep that hedge portion that we had already added on to the ECB portfolio. So in that respect, Minister of Railways is benefited by the partial hedging that we do on the ECB portfolio.
Thank you so much. And I have another question. That is, knowing that IRFC is a tax-exempt entity, it doesn't have to pay any tax. We can see that in the balance sheet, there is a current tax asset of 867 crore as of 30th June 2020, and that has gone up to 930 crore. So what could be the reason as of 31st March 21 that we have one in the first place current tax asset and that is also growing?
Yeah, Oja, please come in.
In fact, that advance tax, in fact, this notification came during September 2019. And and that is 2 quarters advance tax we have already paid. So that is we are carrying in our balance sheet till date, because that June quarter and September quarter advance tax we have already paid. By the time we opted this, we exercised the option under the section 115BAA. That is one thing. Second thing is what we receive, lease receivables, lease rent we receive from Minister of Railways. They used to deduct a very small amount of TDS out of that, and that also deposited as advance tax on our pair. That we are carrying in our balance sheet.
Okay. So, sir, we are not applying for lower or nil loading certificate from the government so that this deduction doesn't happen?
Yes, we will demand for the refund, and once the assessment will be done, accordingly we will give the they'll sanction the refund to us.
Okay, I do get it. In fact, I was saying that maybe a certificate in advance can be taken from the Income Tax Department, saying that since we are not subject to tax, the payer, the Indian Railways should not be deducting any tax, and that certificate will be helpful because that will free up 1,000 crore rupees that we have. Maybe the incremental, not already the sunk cost.
In fact, previously Minister of Railways used to deduct 2% TDS, and we had taken the certificate and exemption from department, and Ministry is right now deducting, I think, 0.75 or 0.5 from our lease rent. That's a normal rate. I mean, it's a nominal rate. We have got the dividend, TDS exemption to the extent of 1.55.
Just to supplement, everywhere we have to take the specific exception from the income tax authority. So this year they have given us for the nil. But earlier, initially, just after this, we had exercised this option. They gave us a 75. That instead of 2%, 0.75 should be deducted. So that is the reason. And besides, for every income aspect, we have to take the detail. Like we are doing some small deposits in banks. So that also for specific those interest income from the bank deposit we have to take. So sometimes, and that specific bank has to be incorporated. So that also sometimes happens that they don't give for the entire bank. So we have to frequently go. In between, if we have done some investment, so there will be some deduction on that.
Right, ma'am. Thank you so much. And sir, one last question I have. Like our shares have been underperforming since the time of stay. So any concrete plan you have to improve the performance? I mean, if you look at the book value of the shares and the market price today, or even over the past 3 months, it's been always almost 90% to 85% lower than the book value. So, and whereas this is such a highly rated company and such a low risk business, it should be much more valued. Maybe we can say that it should be at the price of more than 40 rupees rather than the price that we see today. So any plan you have to convince the market?
You see, market, I mean, it's very difficult. It's a very complex phenomenon as far as the share price, share values are concerned. I mean, sometimes it's very difficult to explain how the markets behave. There are loss-making companies which are coming with an IPO and getting oversubscribed and getting a very handsome listing profit, whereas a company like IRFC is battling for at least regaining its book value per share since its IPO in January 2021. Yes, we are coming to the market. We are disseminating information, but one factor which I feel comes in the way is our capital structure. Since we have the proportion of share capital as a part of net worth is pretty high as compared to other NBFCs, and since it's basically we are lending to the sovereign, so we cannot charge too much of margin also. So that is, and we need to have that requisite capital gearing ratio. So therefore, we had to build up a very healthy, capital base, and that has resulted in, overcapitalization, so to say. I mean, from the market perspective. So therefore, the earning per share doesn't really register that kind of an increase, which other companies do. So that probably may be one of the reasons that it is not moving northward. But going forward, I think once we establish in the market, because it is pretty nascent, we have just come in January 2021, the 6 months have passed by. So we hope that going forward and with the kind of robust performance that we are giving over the periods, I think we will be able to at least go northward. At least we'll regain our book value per share, and then think of going forward.
All right, sir. Thank you so much. In fact, with this kind of performance, they showed 68% increase in profits. Definitely, those days are not hard. We are going to get it.
Thank you. Thank you so much.
Wish you a good luck.
Thank you.
Thank you. The next question is from the line of Pavan Tarodia, an individual investor. Please go ahead.
My question is regarding the margins. Like as you said, you have 0.4% margin with railways and 0.8% with other railway companies. So is there any chances of any renegotiation by railways on the margin front, which may impact our profits?
Yeah, you see, some time ago I replied to this question that we are in regular talks with Ministry of Railways. This margin is actually arrived at after negotiation with Ministry of Railways on the part of IRFC, and we have given a proposal and they are actively considering it, but keeping the present pandemic situation in view and the constrained revenues of railways, especially with the passenger traffic again getting a hit in the wake of the second wave of COVID-19. So the operating revenues of Ministry of Railways have again taken a hit this year. So taking these things into account, it will be asking for too much if you expect Ministry of Railways to immediately consider increasing the margin right now. But they have been apprised of this fact, and they also appreciate that the margin can be increased. But just a matter of time before that call is taken by Ministry of Railways. But as of now,
my question was on the reverse side. Like, is there any chance of lowering of the margin,
No. Okay. That has already been I replied to earlier also. There's no chance.
Okay. Thanks for it.
Yeah.
Thank you. The next question is from the line of Sriram Prasad, an individual investor. Please go ahead.
Hi, sir. Good evening, and congratulations for the good set of results.
Thank you.
My question is, again, specifically something I asked in the past as well, as to your plans on securitization. If something was done already in this quarter, going ahead, what will you plan? Because the way I see it, right, the previous debts are all at 8.7%, and now the interest rates have fallen. So if you securitize and sell, there is a possibility of registering significant mark-to-market gains. It is also a way to reduce your gearing ratio, and then we need not enter into these discussions of, will you dilute and things like that. So what are your thoughts on that is my first question. I'll ask my second question after you have answered this one.
You see, we generally go for, refinancing of the costly loans that we have taken earlier.
Correct.
So that aspect is already taken care of. We are doing it on a regular basis. As a matter of fact, on a regular basis, we are doing this. And most of these, I doubt if there is any loan which stands in our books which is more than 7%. So they're all sub 7%. So on that score, there is no issue. We are regularly doing that, refinancing the old loans. And so all the entire loan book, the entire borrowing that we have is at a very affordable level. And whenever whenever any opportunity arises for securitization, we are definitely ready for that. But as of now, the occasion doesn't demand.
Got it, sir. And my second question is with respect to book growth. Is it always likely to happen that the significant amount of growth of the book happens in Q4, then we have a relatively flat Q1, and is that going to be the trend going forward also?
That has generally been the trend over the years, and that happens with not only railways but Government of India in general. That Q4 is pretty, the borrowings and the lending are all. So you can't avoid it. You see, out of that 1,04,000 crores that we gave last year, only 34,000 odd crores were given till Q3. And the entire 70,000 crores was in Q4. And out of that 70,000 crores, also more than 60,000 crores were disbursed in the month of March. So that was that generally happens, and it's not the pace of work that picks up only, but it's also the billing, the invoicing that picks up, at the fag end of the year, especially Q4. Yes.
Correct. Sure, sir. Thank you. And one last question, sir, is with respect to, do you have any target ROE that you aim for in the sense of your decision to relax the leverage limit or whatever? Is there a particular ROE that you are targeting?
No, we are not having any such kind of as of now, we don't have that kind of a target for a target ROE, but we will definitely look at the possibility of, or the option of not going to the market for further infusion of equity into the company. So we will not. That is one of the things that we have in mind. That of course we are not nearing that kind of a critical situation going forward. But when the time comes, then we shall definitely go for increasing our gearing to beyond 10. And but our main objective here is to not go to the market in near future. So that the shares not higher.
Correct. Another last question with respect to something that was written in the financial statement, sir. It said that there is a lease accrual of 670 odd crores against a 6,000 crore asset issued during the quarter. I was somehow unable to reconcile those numbers.
Yeah, please. Ojha, please come in.
Actually, this number pertains to the assets acquired during this quarter, particularly from 1st April to 30th June, towards rolling stock. Actually, rolling stock worth of that 6,000 something crore that has been acquired during this quarter.
Correct. But how does a 6,000 crore asset give you 600 crore of lease income during a quarter. That is what I was unable to reconcile.
Yes, that asset plus lease income, what I meant to say regarding pre-lease income also, put together both the funding, that income we have derived during this quarter.
Okay, so this is not just the interest component, but the pre-lease income also. That is
Yes.
what you're saying. Okay.
Yes.
Yeah. I mean, it is both on the leasing of rolling stock as well as project assets. So,
yeah. Okay.
The pre-lease is basically on the project assets.
Okay.
And this is the because on project assets, the lease starts only after a moratorium period of 5 years.
Okay.
So the pre-lease pertains to the project assets, and the lease income refers to the rolling stock.
Okay. Thank you, sir. That's it from my end.
Thank you so much. Thank you.
Thank you. The next question is from the line of Ravi Agarwal from UTI AMC. Please go ahead. Mr. Ravi Agarwal from UTI AMC, your line is unmuted. Please go ahead with your question.
Sir, thank you for the opportunity. I have one question about the borrowing plans for the year, and how much is the incremental borrowing we're looking at, and what is the gearing level the company is comfortable at?
You see, as far as the borrowing is concerned, it's a mix of various markets. I mean, we intend to go to the ECB also in a big way this year, as we had gone last year. Last year we had raised about $4.075 billion USD, and this year also we have upsized our GMTN program, the Global Medium Term Note Program, by $3 billion more, from 4 to 7 billion USD. So we intend to raise a substantial amount of money through ECB, as well as long-term loans from the domestic banks and financial institutions, and some amount from the syndicated loans from overseas, and in dollar terms. It can be in yen terms also, and a considerable portion from bond issuance too. It can be a 15-year, ranging from 10 to 20-year bond issuances. So it's a mix of various. It all depends upon the market conditions at the time of going for the issuance, and so accordingly, the only thing that the driving force is that we have to aim at the least cost borrowing at that point of time. So, and this actually we try to leverage the the positives of various sources of financing, in a very optimal way, so that the end result is we will get a very optimum end result at the end of the year. Therefore, how much would be through ECB, how much through long-term loans or through bonds, that all evolves in course of the year.
So, without having any bifurcation as to how much it will be from any of these sources, what would be the targeted borrowing plan for this year, and what would be the sort of cost of borrowing you would be comfortable at?
You see, we are comfortable
considering the NIM margins. We have some pressures on the NIM margins also. Currently, it is just 1.66.
No, that's okay. The point is that, you see, for instance, in last year, we did leverage the market conditions to our advantage, and we got 86 bips lower weighted average cost, which was pretty considerable, very, very considerable, and 6.51% was the weighted average cost of all the sources put together, weighted average cost. So that was pretty. Whether we will be able to repeat this 6.51%, only the times will tell. But as of now, going by the way the Q1 has behaved, the market is not that liquid as we had seen in the corresponding quarter of the last year. In the corresponding quarter, there was much more money in the market, and the rates were much more benign. The rates have hardened since, and that's primarily because of the fact that there have been a lot of government borrowings during this period, But still, considering that fact also, we have been able to extract the best rate possible, because IRFC does manage to get good rates when it comes out with bond issuance, or when we are negotiating with the banks for the long-term loans. And we are getting long-term loans for a longer tenor as compared to earlier years with a moratorium period. And the banks are pretty forthcoming because they feel that, their arrangements with IRFC are generally less risk-borne, and since they are all guaranteed by the sovereign, therefore there is no question of any NPA in the books of IRFC. Therefore, we get a very good response from the major commercial banks, be it in the public sector or in the private sector. So on that front, we are pretty, evenly poised. Yes.
And lastly, sir, are there any sort of gearing levels in mind?
Gearing levels, as I said earlier, we are open to seeing the gearing level moving north beyond 10. We have always restricted our gearing level to 10 times. But we are very well ensconced with a very comfortable capital adequacy of 58% or so. It's pretty okay. I mean, we can go ahead with beyond 10. We can go beyond 10, and we are open to going beyond 10. Only ensuring that we don't come to the market with fresh issuance. We don't intend coming to the market with any further fresh issuance.
Sure, sir. Thank you so much. All the best.
Thank you. Thank you.
Thank you. The next question is from the line of Siddharth Gupta from Voyager Capital. Please go ahead.
Good evening, sir, and congratulations on posting another set of numbers, sir. I've said this before on previous calls. It continues to baffle me why the market doesn't respond to such excellent results, but I'm sure they will. I'll just quickly cut to the chase and ask my question. I've raised this in the past as well, so I'm not going to go over it. But recently on Independence Day, the Prime Minister announced that over the next 75 weeks, 75 Vande Bharat trains would be operated by the railway. So can we get a head count as to, has the order already been incorporated within our results? Like, I mean, has the order already been placed through IRFC, or is this something that we can expect to be accounted for in the upcoming quarters? That's just the only question I have. Thank you, sir.
Okay. Now, as far as the Vande Bharat trains are concerned, or for that matter, any other rolling stock requirement is concerned, be it the passenger coach or the locomotive or the freight wagons or any other such track machines, these are all rolling stock requirements. You see, over a period of time, we have seen that both rolling stock as well as projects are partly financed through government budgetary support, and the rest of it comes through the IRFC financing, that is the EBR financing, right? Extra budgetary resources financing. Now, but over the last 5 years, from 15-16 onward, we have seen that almost the entire fleet of rolling stock has been financed through the IRFC borrowing.
Right.
That we have seen, as per the capex outlay plan of Indian Railways, that has actually almost dovetailed with the kind of financing that we have done only for rolling stock. So we do believe that a major portion of this of this stock that you are talking about, 75 of them, would be financed through IRFC. That is what we believe. But when we are getting the requisition, it is not that way. We don't get the requisition that this is for which kind of a rolling stock that we are financing. The demand from railways comes, on a lump sum basis, that for rolling stock we require so much of money. So we don't get to know the details of the allocation of our disbursements to a particular item of rolling stock. Yes.
Right.
But we are sure. But we are definite about the fact that yes, the major portion, if not the entire portion, about at least as of now, more than 90% would be financed by IRFC.
Right, sir. So, and just a quick question about, so the last year there was this policy floated by DIPAM asking PSUs to pay out the dividends at a more regular interval. and that was something. So is that something that the company has been contemplating? Is that something that we can expect? Obviously, there was nothing this time around, and not that I'm complaining. I would want the company to retain as much money as possible.
Yeah.
But yeah, I would just would like to know if that.
Yes, we know about that fact, and we have. But you see, as you rightly put it, that since we are an NBFC, we need to conserve the funds because that is again for the. I mean, that's what our business model demands. But it's not that we are close to this idea of say paying on a quarterly basis or on a half-yearly basis to start with. We are not close to this idea, but we have not yet taken a call as yet. I mean, as far as the new guidelines of the firm are concerned on the regularity or the periodicity of the announcement of the dividend payments.
Right. So my query was actually more along the lines of whether there's been any, directive from the.
No directive as yet. No directive as yet. This is only a guideline. Yes.
Right. Okay. Thank you, sir. Thank you so much, sir.
Thank you.
Thank you.
I think we can take the last question.
Sure, sir.
Thank you.
The last question is from the line of Pranay Zaveri from JNG Holdings. Please go ahead.
Good evening, sir. Thank you for this opportunity. And congratulations on good set of numbers.
Thank you so much.
Sir, I just have two questions. One is, after seeing Q1, how do you see this year panning out and maybe another 2-3 years? I'm just trying to understand from a broader view, year-on-year growth for us.
You see, we see a very bright future as far as this year is concerned, and we have been given an initial mandate of 65,000 crores. This will definitely go up in course of time as the previous years. As is borne out by the trend in the previous years, and as you are aware that there is a national infrastructure pipeline in place. And we have to, and National Rail Plan is a subset of that National Infrastructure Plan. And we will be contributing a major portion of that capex plan outlay of Indian Railways in the, say, next decade or so. And therefore, as far as the growth momentum is concerned, I hope that this momentum continues, and it will definitely continue in view of the planned outlays of Indian Railways in the coming years.
So, sir, can we see a 15-20% CAGR growth for another 2-3 years?
It's already more than that. If you look at the presentation that we have given, the CAGR is, as far as the revenues are concerned, it is 15, I think 18% or so. The AUM is at 33%. And the CAGR is all 15-20%. There is not a single parameter which is less than 15% in any of the parameters.
So that's what we foresee for next 2-3 years also.
Oh yes, absolutely.
Okay. And so my last question is, how many number of employees do we have?
You see, I have total number of employees just above 100, right? This includes about 63 outsourced employees, and rest of them are all own employees. So, just over, it's about 100 employee strength, but on roll is less than 40. On roll, who are permanent employees of IRFC, that is less than 40 as of now.
So my question was basically, for the full year, our employee cost is about 8 crores. So you are saying that this 8 crores pertains to this 40 permanent employees on our books?
Plus, no. As I said, that the total staff strength is 100, so the entire staff strength would be added for that. The staff costs would be added.
8 crores for 100 people?
Yes.
Okay, sir. Thank you so much. Wishing you all the very best.
Thank you very much.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to Kunal Shah for closing comments. Over to you, sir.
Yeah, thanks, Mr. Banerjee, for patiently answering all the questions, and thanks all the participants for participating on the call. Have a good day. Thank you, everyone.
Thank you, Kunal. Thank you so much.
Thank you,
everyone. Thank you, everyone. Thank you.
Thank you very much, ladies and gentlemen. On behalf of ICICI Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.